Welcome to Psych's The Bottom Line Pharmacy Podcast, your regular dose of pharmacy CPA advice to fuel your bottom line, featuring pharmacists, key vendors, and other innovators.
Your checks, yes, you can call me.
Good morning, everybody.
Depends on when you listen to it, Scotty.
I guess so. We got a special episode today of the Psych's Bottom Line Pharmacy Podcast, and today we have Scott Burnett with Burnett Associates, legal firm there. We've been working with your group, Scott, for many, many years, going back to the early 2000s thereabouts.
Yeah.
Where you guys have helped a lot of our clients with corporate minutes and things like that. In fact, I think you went to a few maybe pharmacy trade groups or trade shows. You've been to a few of those, so I'm sure you have quite a bit of pharmacy clients over there. But
Scott just got finished saying that his kids try to age him by asking him if dinosaurs were around, and you just asked him if he was working with us in the early 2000s.
What? Hey. Yeah, I'm here. Dad is here.
Okay.
Yeah. So, but we got a hot topic today, Scott, and I joined a webinar that you put on about it, beneficial ownership information reporting. That is a new regulatory requirement through FinCEN, Department of Treasury, that's going to impact just about every business. BOI, boy, oh boy. And pharmacies are in the crosshairs for this. So Scott, why don't you kind of give us a little intro on that and just lead us off here.
Okay. Well, what we're talking about is a law that's been sort of in process for several years now. It was originally under the Anti-Money Laundering Act, and it's been going through these little maturations, but it is, under the Treasury Department, as you mentioned, and it's under FinCEN, Financial Crimes Enforcement Network. And what they're doing and what they're trying to accomplish is they're trying to find out about all these types of corporations that are out there, because there's many states, right, that have formations where the identity of the operator or the owner is kind of off public record. So what they're concerned about is shell companies, drug traffickers, human traffickers, money launderers. And so a lot of this is all about trying to sort of clean up the system. So the Financial Crimes Enforcement Network is this new regulatory agency, and it's on parallel with the IRS. And the Treasury is saying, okay, financial crimes enforcement, there are roughly 35 million corporations and LLCs out there. And we want every one of those companies, with a few exceptions, to register with us. And we're going to have a bit of a stick, right, if you fail to register, and we're going to punish you if you don't. So it is a new law. It is in effect as of right now. It's effective on January 24th, January 1st of 2024. And there's a few rules to it, so we can kind of break that down any way you want to, Scotty.
More paperwork, right, Scott?
Yeah, it's a little bit more paperwork, but it's not as intrusive as everybody kind of is intimating about it. I watch a lot of it. Like I say, I've been following it now for a lot of years, and we're providing CPAs and continuing education about it for a lot of people. But for the business owner out there, a lot of people just don't know about it. So it's kind of like, why do they want this? And why are they doing this? And, it's just sort of overcoming that initial objection, which is they feel like it's an invasion of privacy.
Right.
But in truth, right, all of these companies that everybody has, they're already reporting. They're already technically surrendering privacy because they're giving that information to the IRS when they file tax returns. So the FinCEN program, it's called BOSS, their software, Beneficial Owner Secure System. And it is something that no one's going to be able to access, right? It is kind of locked down. You can't subpoena information. The public can't get access to it. But because it is a government operation, it is a little bit more sophisticated than the layperson is typically used to. So let's kind of get into the meat of it a little bit. This is governed under FinCEN.gov. That's where a company would register. So it's FINCEN.gov. And so every company has to go in there and register. Now, what has to be registered? Well, there's really two things. One is the registrant company. So if you had a pharmacy, as an example, that pharmacy has to be registered. So what is the company name? What state was it formed in? What is its business address? And its tax ID number. Easy peasy lemon squeezy. The registered company is not the issue. Then underneath that, FinCEN wants to know about the ownership. So if you have an ownership percentage greater than 25%, then that person is referred to as the BOI, right? Beneficial owner, and they want his or her information. Now, what do they want? Well, they want your name, they want your address, they want your date of birth, and then they want an identifying, some type of identification number. Could be a driver's license, could be a passport, could be an ID. So they want that, and then they want you, in addition to that, to prove that that number is accurate, they want you to upload that driver's license, that passport, etc., to the FinCEN site. Now, they say, and I concur, it is a one-time filing. So I'm going to give you an example. For me, Burnett Associates, I formed my company years ago. I've been in the same location, the same address. I'm the only owner. I've been here forever, right? So if I was to do a filing, I would put in my company's name, all that information. I would put in my BOI information. All of that would be the same. And if they would have implemented this, let's say 20 years ago, this would have been, in fact, a one-time filing because I have never changed anything related to it. So that is what they say. It is a one-time filing. However, if there is a change, so let's say hypothetically I sold a portion of my business to somebody, then I would have to file an amendment. So I had a one-time filing, but now I have to file an amendment.
Got it.
And then there is also under beneficial owner information, it kind of goes beyond just ownership. So let's say I had a company and there were 4 partners and all of them were 25, 25, 25, 25, right? I would obviously fit the description of somebody that needed to report the beneficial owner information, and all 4 people would be required to report that. Okay, no problem. But they also say beneficial ownership includes substantial control. Like the IRS loves reasonable compensation, and they never find that in any way, shape, or form for us. So substantial control is also one of these sort of gray areas for most lay people when they look at that. But what it means is if you have a CFO, a CEO, even if they're not an owner, they must be listed.
Oh, wow.
If you have a manager and they're below the ownership threshold, they must be listed. So beneficial owner information isn't just ownership, but rather ownership and or substantial control. And there is no limit to the amount of BOI information that a company may have to put in. So
that's interesting. I did not know that. That's interesting.
Yeah.
You talk about a gray area that could get really gray.
Yeah.
Well, it even gets even tougher than that because I mean,
what about a pharmacist in charge at a pharmacy? You got an owner, but the pharmacy has a pharmacist in charge who pretty much runs the pharmacy, is the main responsibility for the pharmacy. That could fall into that.
Are they titled positions? Do they have really control? Do they hire and fire? Are they technically running the company? Then yes, they would be listed. Another caveat to that, Bonnie and Scotty, is that it's an attribution thing. A lot of clients, especially a lot of our pharmacy clients that we have, they have multi-level structuring. company A owned by company B, owned by company C, and then that company is brought out through other companies. And then there's even potentially a trust involved. And some of those are irrevocable trusts. Some of them are grantor trusts. Some of them are international trusts. So when we are doing this BOI report, if you're doing it kind of as a person going into it, it can be a little bit overwhelming. The issue with that is that it's going to follow it by attribution. So if company A is owned by company B, we don't list company B as the BOI. We follow that. So who's the owner of company B? Company C. Well, we can't list company C. So ultimately, we'll get to the end user, right? Who is the owner.
Are you paying attention, Bonnie? Because you have all these shell companies. I want to make sure you're...
Yeah.
All right, good.
And then we can start talking about my international investments.
Yeah, and we always appreciate it when Scotty throws you under the bus like that. So that's awesome.
Sure.
But where it gets a little bit sophisticated is that, let's say company A goes into this trust, and the trust setup is a international trust or an irrevocable trust. Well, now the settlor, the person who created it, and the beneficiaries are probably the client, right? They're the beneficial owners. But the trustee's in control. And as a result, the trustee has to be listed also on that BOI reporting. So it's a little bit more sophisticated for the mom and pop shop, right? The easy peasy lemon squeezy ones like me, right? It's not a complicated transaction. However, if you have a lot of structuring, it is. It's a little bit more sophisticated. So a couple of things. One, what the most common question I hear is, how do I get out of this? How do I get out of this? Right? And I love the criminal mind at work. No, you cannot get out of it. It is a mandatory filing. And when I say mandatory, they put some teeth into this regulation.
Yep.
$500 a day civil penalty.
Ooh.
Willful failure to file, which is an intent type of crime. I mean, I'm a former prosecutor, so I kind of love these sort of regulations. But willful failure to file, $10,000 fine, and 2 years imprisonment.
Gosh.
So they're not fiddle farting around about this.
They're not playing.
No.
Wow.
That one. So the teeth in this is the enforcement of it. Can I get out of it? No, it's mandatory. What if I don't do it? Well, they're gonna fine you. So a question that comes up, and as a former prosecutor, I was like, well, how would they know, right? How would they know I didn't do it? So here's how they're going to work this, right? Intellectually, you could see it. FinCEN will have their report of all the companies, let's say from Wyoming. Let's use Wyoming as an example. There's 1,000 companies that reported from Wyoming on the FinCEN report. FinCEN goes to Secretary of State in Wyoming and says, how many companies are in Wyoming? Oh, we've got 10,000. So now we have a discrepancy between FinCEN and the state. Mm-hmm. And those 9,000, those are the people that they'll find and get fined. So because of the way that it could be easily cross-checked, again, this is not anything that anybody should get twisted up about. You're already complying. You're already reporting. Maybe some of the companies that you own don't have income, so there hasn't been a need necessarily for reporting, but they're not looking to levy taxes against the entity. They're just trying to find shell companies, money launderers, drug traffickers. And I'm assuming our clientele, our shared clientele, don't fall under that umbrella. All right. So do you have to do it? Absolutely. Do they have any teeth? They have real teeth. And the way that I see it, just like the IRS exists in the creation of funds, right? I mean, for failure to pay and not getting it done and penalties and assessments. This is a regulatory agency that's going to exist through penalty enforcement. And they are on par with the IRS in terms of their ability to levy that. So you're going to get a fine. Can they institute liens and garnishments? My suspicion is that they will. I absolutely have no doubt that they're going to be very serious about the enforcement of this.
So who's responsible, Scott, for making sure this is being done? Because I know a lot of entities out there, owners are going to rely on maybe their attorney or their CPA. Like, who does, what is this?
Well, that was the biggest thing that everybody was wondering about, really, in the beginning, was who's going to be the responsible one? Is it going to be the accountant? Right? Is it going to be the lawyers? Is it going to be the person who formed the company? And what they did is they just said, no, we're not going to do that. We're just going to make the beneficial owners, the owners of the company, responsible. So your CPA is not responsible for the filing. Your lawyer.
Wait. Can you say that one more time, Scott?
Your tax professional, those saint-like figures, do not have the responsibility of reporting it. So
our state association is some state associations are saying it's a practice of law and CPAs can't do it.
And I'm hearing that also because I work with a lot of tax professionals. It's not covered under their error and omission, so it won't be a covered thing to do. And because the owner responsibility, it would be like you have to capture all of this. And then we kind of get into the details of it, like, when you get the address of the company, it has to be a real address. And what the FinCEN site will say is that it's got to be an address where we can go and we can find you there.
Right.
So it can't be a P.O. box. It can't be an executive suite. It can't be the stuff that a lot of these, registered agent office. So it's really, it's got some sophistication to it. And, as a former prosecutor and somebody who understands, law, it's not that. The way that they're trying to do it is they're trying to make sure that they can enforce it. So they're not going to be chasing carrots all over the country. So deadlines on it are probably important for everybody to hear. If you have formed a company prior to December 31st of 2023, so almost every one of your clients, right, has a corporation or LLC that has already been in existence, they must file, and they have 1 year. From December 31st of 2024, they must have filed that FinCEN report. Okay? Accurately, completely done. All right?
And how are they being notified about, how's the word getting out, other than this great podcast, about the filing requirements?
To be honest with you, just like this. It isn't anything that I've seen in national news. I've seen it in little blurbs. It's almost there. I think FinCEN is expecting the accountants to notify the
spread the word.
That's a responsibility, but there's not much out there. So like people like you, your firm, which is doing this and getting that word out, you're the good ones, right? But there's plenty out there that are not really sharing the information because it's not their responsibility. So, really congrats to you, props to you for doing it. So the deadline for your clients is a year. Whether that corporation is taxed as a C corporation or an S corporation, whether that LLC is taxed disregarded, partnership, or as a corporation matters not. If it's the entity, includes any entity filed in any state where it is an LLC, a corporation, limited partnership, limited liability partnership, professional corporation, and or a nonprofit that has not yet received tax clearance must report.
So even your little single member LLCs.
Yep.
Real estate LLCs, single member.
That are on your personal return kind of stuff is.
Yep.
Oof.
So that is that all the companies are reporting now, everyone, regardless of the tax. So what a lot of the discussion gets into is, well, I'm a sole proprietor. Well, you're not. You formed
you're an LLC.
entity, and your tax is a sole proprietor, but you're not technically a sole proprietor. So that's one of the issues.
Yeah.
So an interesting thing is that you have this year. I always kind of like think of it as a timeline, pre-2024 and post-2024. So pre-2024, you have a year. Now, I always kind of do this joke at live workshops, but, I'd say, raise your hand if you're a procrastinator. And of course, neither of you are raising your hands. And then I would say, well, I guess you'll raise your hand tomorrow because people procrastinate. That is the nature of things sometimes. And what I am fearful of is that people will wait until December of this coming year and try to file it all at that time, and there won't be enough time to get it in accurately. So I would advocate that to your listeners, don't wait on it, please. There's a certain level of sophistication, even if you're trying to do it yourself. The site is a government site. It is not an easy site to navigate. Right? I've gone in there multiple times. I've had to do that for multiple companies that I own and get applicant numbers. And it's not a very easy site, number one. Number two, it doesn't save anything.
Oh, no.
So you go in there.
You got to do it in one sitting.
You better do it all in one thing, and you don't know what to
That's
do.
terrible.
So you can't do it. So, and then think about this too, Bonnie, because this is a good one. If you have an amendment, since nothing is saved, what do you do? Any
To
type
redo
of
all of it.
you got to do it all over again. So it's a bit of a mess. So, we're kind of trying to make it easier.
Maybe they'll work on that
What's
before you have an. Maybe they'll fix that before there's amendments to be made. He's left. Maybe not.
Yeah. Okay.
Yeah.
And every grain of sand is worth $1 million. No.
It's 2024. I would think there's plenty of different, computer software systems out there that could do that.
The problem has been is they've been really trying to streamline the software, and after multiple years, this is the program.
Oh.
So the problem is making a change midstream is going to really kind of create some havoc.
Mm-hmm.
So we're talking about the deadlines. I'm coming back a little bit in our discussion. The deadlines of before 1 year. Now, any entity formed after January 1 of this year, right?
Like new startup pharmacies.
Mm-hmm.
Right.
Like right now.
New entities, yep.
Right? Only have 90 days.
Ooh.
And it was going to be 30 days. It will be 30 days in 2025 going forward. But right now, it's only 90 days. So any new company formed has to have the reporting company. It has to have the beneficial owner information. And it also has to have the applicant. In other words, they want to know who formed it. So that's a new thing. The pre-2024, you didn't have to have the applicant. You just have to put in the information. After the new ones, reporting company, beneficial owner information, and the applicant. All right. And the applicant information is just like the beneficial owner information. Validation, IDs, addresses, everything. So it's, for lack of a better term, kind of my ode to Huxley here, it's a brave new world. And
so someone that's just on, creates an LLC or gets a federal ID number on their own. They're just, in the early stages of something. Sometimes people do this and don't even tell us about it. I had a client call me yesterday in talking about something else, just happened to mention, I waited to do it until 24, but I started a new LLC and I was just going to ask you a couple questions about it. And he said, it's just something he's thinking about, just a side thing he's thinking about doing in 24. He didn't want to have to do a tax return for 23, so he waited till January. So something like that, he needs to file.
Yeah, and it's funny because like we were talking about, well, how is the word getting out? Well, think about it. People don't know. And
that's
they're
my
going to
point.
be in violation is, without even knowing they're in violation. But, it is the new world. It is in effect. Great organizations like yourself are out there getting the word out, right? But again,
so there won't be any prompting when you're getting an EIN.
Negative.
Or
hopefully, like for us as an example, when we're doing our formations, we go
make
through
it part of your process.
Give them an applicant number for that so that they don't have to get all the personal information. It's an easy process for them. But that's kind of where we started our journey, actually. When you think about it, we were saying, okay, well, how can I help for some of your clients if they want assistance with the filing? And so that's kind of where this whole actually our podcast began with.
So there are some exceptions, though, right, Scott?
Yeah, there's 23 exceptions, but most of those
Just 23.
Just 23. But most of those exceptions are companies or organizations that are already regulated, right? Banking institutions, insurance, brokerages, etc. Inactive companies with really no business, but you've been keeping the company alive, but it's transacted no business, no changes, no nothing since 2020, would not have to report. The big one that might affect you would be the large company. So a large company is defined as a company that has 20 full-time employees, right, and $5 million of gross revenue. Now, the revenue requirement on the pharmacies is going to kick no problem, right? But you have to have 20 full-time.
And then what constitutes full-time?
Right, and they really define that in the site.
Oh, they do. Okay.
Really go into that.
This gives me PTSD from what was it we did? We had to try to figure out full-time
PPP.
employees equivalent PPP.
What about gross receipts? Because there's a lot of different definitions for gross receipts too.
So we have an expression when we do minutes and resolutions in the office. We say, when in doubt, write it out. Right. And so if you're not sure if you're going to meet that 20, I would advocate to you, just
do it.
Right. This is one thing right now where I think, because the tenor and the tone in the country is very anti-government. It's privacy. It's a lot of different ideologies out there that are bouncing around. And I'm sure there's going to be a lot of discussion about this on the boards. But the reality is this is the law. And when you follow it, you make your life so much simpler. I'm a former prosecutor, so every defendant that came in and standed tall before the man in my courtrooms when I was there was always looking behind them. I used to refer to it as the tail. They would always be looking at their tail because they were afraid they were going to get caught in a door. When you don't do something that you're supposed to do, you're always looking over your shoulder.
Right.
So filing this early, getting it done, the peace of mind that is worth to me is worth the headache. It's just
$500 a day. I think I would make sure I was in good shape.
I sure would too.
Yeah, because it's just something that when they enforce it, it's just like when we talked about the IRS. Does the IRS enforce a judgment when it has you have a penalty and you have to pay it, and you say, well, I'm not going to pay it. Okay, well, sure, we'll just give you a mulligan. But next time, I really mean it. I'm serious. I want you to pay it. They don't do that.
Right.
And they're not going to do that here either. They're going to.
Is that $500 every day or business days?
That I don't know. But I would say, conservatively business day, but in probability every day.
Okay. So if you are exempt, if you're a $20 million pharmacy with 50 employees,
you're good.
Full time, you're good. Is there anything you file? Is it just you ignore it and you need to create a file of your documentation in your file and move on, or what?
Well,
let's just say you're a pharmacy with $20 million of revenue, gross receipts. You have 60 employees. Obviously, you're over probably the 20 full time.
Yep.
You just ignore all this, and you just create some documents to put in your file to support it and move on?
Yep, that's exactly right.
Okay.
As long as you knew that and you were within that definition.
Yeah.
With that being said, if the business changed over time and you didn't meet that criteria, then you would have this affirmative obligation. All amendments are 30 days.
Wow.
To file.
Quick.
Yeah.
Yeah. So kind of we've kind of been discussing it as, this is what it is, and this is the enforcement, and this is why you do it. But when you get in there and you start doing it, it can be a little bit sophisticated. So what we discuss, Scotty and Bonnie, is, we can help your clients. I mean, we have a lot of shared clients, by the way. We have a lot of clients that we've met through pharmacy programs that are both your clients and our clients already. So we can help you. Our website has a, what are those little headers at the top called? Headers?
Header sounds good to me.
Login.
You know, on your website, you have those little things, little page things. So we have a FinCEN page.
Links.
Yes, you. And now you can see why my kids ask me about dinosaurs. The FinCEN page on our website, so Burnett and Associates, all spelled out. And then you go to the button, hit FinCEN. And then any of your clients can type in, there's a promo code in there on the purchase button, and they put in SYKES, SYKES 20, and they'll receive a $20 fee off of the cost of filing. So we're charging $199 to do the filing. So you can go to the website, thefincen.gov. You can navigate it yourself. You can see if you can DIY it. If you feel it's a little overwhelming, and it can be a little bit, then we can help you with it. And because we have a shared clients, we're offering this as a promo to all your clients that they can get this.
Well, that sounds reasonable to me.
Big part.
I said that sounds reasonable to me for sure. I'm sure there's scammers out there charging $1,000 plus.
Yeah, law firms that I've been talking to and the CPA firms that are doing it are big ducats to get it done.
Oh man!
So what
they're going to move away from trying this ERTC thing. Now they're going to move to this, which is going to be a lot less revenue, but still.
Well, our program, we have a platform. It's like a software where you're going to be able to log in, create a password, populate things, come back to it, unlike the government site. So that if later you have an amendment, we have all the original information so that we can go back and just simply modify it and file the amendment. So once the client puts all the stuff into the platform, we review, make sure that it's accurate, we have a direct link with FinCEN from our platform to that, and then we would send the certification back to the client that it's filed properly.
Nice.
And I think where we, like I say, a lot of clients have this multi-level one. That's the ones that probably need a little bit more, respectfully, like a little bit more hand-holding to get that done properly, especially if it gets into trusts and things like that.
Is there any common ownership exemptions or no? I mean, if you've got if Scotty and I were 50-50 in this pharmacy, 50-50 in another, 50-50 in another, and they all were $3 million each, is there anything with common ownership?
On that gross receipts test?
Yeah, that we could, since it's common ownership, but all of our revenue for...
Well, you can
exceeds.
get you can get an applicant number, right, that's assigned to your name, because you would have it under one company, and then you would apply that applicant number to each of the companies. But it's the reporting company. Each company has to report.
Yeah,
and then each
their own
company
federal ID number and
has different BOIs. So a question that came up yesterday, actually, in a call, well, I've got 10 owners, and we all have 10%. So we don't have to report them. Well, the reporting company has to report. Okay. Now, there's nobody that has 25%, so I guess we're immune. Well, who's the manager?
Yep.
Who's the board of directors? Who's the president?
Somebody's in control. So you're always going to have... So what I'm hearing you say, Scott, is there's not going to really be a situation where you just put the business information, because somebody is in charge.
Somebody's in charge.
Right.
And they know that somebody's in charge. Now, if you have, I operate for companies, for a lot of clients that for privacy purpose, I act as a nominee.
Right.
But nominees are not listed on the BOI, right? So again, just the little things of sophistication, the addresses, no PO boxes, none of that stuff. The BOI ownership in terms of substantial control. You're under 25, but you're the manager, then you're going to be there. CFO, CEO, it's just, they're going to definitely want somebody. And that person has to have a physical address, a real address. So the stuff that I hear, I have a Wyoming company. Can I list the Wyoming address? Unless you're there, you cannot.
Right.
So this is here. This is here to stay. It's
Yep.
It's here. So Good stuff, Scott. If you're listening in and you want some help with that, Scott Burnett and Associates, Sykes 20. We get no kickback on that. I want to be real clear on that. No conflicts here. But Scott, good information, and appreciate you sharing that with us.
Thank you very much for having me.
Our clients, when you contact us to tell us to help you with this, and you will, we can't do it for you. We love to take care of our clients, but we are not allowed to do that. So we will make sure we put you, if you do not want to do it, feel like you said it's too much, too cumbersome, we can put you in contact with someone that can.
Yep, I would be happy to take care of it. And then we talked about this, but if you are a corporation or LLC and you're not doing your minutes and resolutions, not only will we do the FinCEN filing from you, but as a gift from Sykes and Company, we will end up taking over your minutes and resolutions. Assisting with that.
Oh, there you go.
So for a year for free.
Hey,
so,
we always ask if they're doing that.
We do, because the first thing the IRS is going to ask is, let me see your minutes.
Well, my background's in litigation, so I did 60 jury trials, and my specialty is piercing the corporate veil. And the criteria that is commingling, which clients they love to do, but lack of formalities. And that's the key that unlocks the door. And then once you get past one company, every other company is exposed. Yep. So it's really important, if you operate these things, to operate them properly. I always kind of related to like joining a club. You joined a club, you got to follow that club's rules. Otherwise, they're going to kick you out of the club.
Well, we'll have to do a follow-up podcast on that. That'd be a good topic.
Well, on a different topic.
If we do follow up on that, let's make sure it's not the day that it snowed like crazy here last night. I had to fight tooth and nail to get into this place.
Oh, gosh.
Yeah, it was crazy weather last night here.
Well, we've had some hurricane winds around here.
Yeah, it's an interesting year on that.
Yeah, it's crazy.
Weird.
Well, thank you both for your time. I appreciate it.
Bonnie.
Yes.
Are you going to do?
Oh, the bottom line. So, Scott, at the end of each podcast, we do a real quick, from each of us, the bottom line. And I was not quick on the last podcast. I'm going to be quick. Don't procrastinate. That's my takeaway. And also, just when in doubt, file it. Just do it.
Yep. I would agree with that. And
then you can, what is the word you use? That you can not live in peace. You can.
Peace of mind.
Peace of mind. No stress.
Yeah.
Live in peace.
Because honestly, because we've been doing them now, we've probably onboarded, a few hundred different companies. And sometimes it takes a little bit. There's a lot of discussion and trying to help people understand the rules and then getting the information. And realistically, it's not going to be possible to manage the volume in December. You're just going to have to turn people away.
Right.
Yeah.
So
December is going to be bananas, I bet.
Yeah, and it's going to be a marketplace where it's going to be a lot more expensive to file if you're looking for help, because people will charge that premium for that level
to get it done.
That last minute. Well, Scott, thank you so much for getting on with us and sharing the information.
Appreciate it.
And we'll have to get you on again sometime, talk about corporate minutes and piercing that corporate veil. That's a hot topic. So
that's a good one.
That's going to be a good one.
Thanks again, and appreciate all our listeners.
Yes.